been found and is now in the possession of the Army.
CBR Street Gang, over, lab by 85, over.
All right, we're going to do a little microphone test here before we get rolling. Want to see if everyone can hear me in the various chats going on here. You guys over there in the Parsec share and YouTube, if there's anyone currently in there. I see there's a few, yep. And in the Discord, go ahead and let me know if you can hear me okay. And we're going to get rolling here in about 30 seconds. Excellent. All right, so we're just going to roll right into it today. Hello and welcome to Macro Mondays here on Landy's Crypto Corner, where we take a look at the longer term timeframes for Bitcoin and some traditional market stuff, as well as Dixie and commodities, and weave that into our daily analysis. Now today we are going to start out with a recap of some of the targets from the Bitcoin in 60 seconds video on Saturday, and there was no need to upload one on Sunday as the targets remain the same. There was no real slope changes in terms of the Bollinger Bands. And, we have a pretty good idea of where these areas of interest are. But let's recap. What we had last seen was price trading around this 26,400 when it spiked that low, which is this low over here. And I had mentioned that the next big area for Bitcoin to pull back to that bulls would want to see defended pretty well would be the basis band, which is around that 26.3 right now, to that weekly at 26K, down to the lower first. And the lower first was at around 25.7 to 8, depending on how price was oscillating at the time. And in this case, we did see a pullback to that weekly area right there at the low of around just under $26,000. Now, the weekly is in the lower 26,900 area, but just generally speaking, around 26K to that lower first, which is currently running right up on that weekly as it stands at just under 26K as well. And I would say give it some room on a pullback. If it does pull back further, you want to see this area at the weekly hold to around 25.7 to 8. Below there, I would be looking at the wick lows around 25.5 and that lower second area at 25.3. Below there, I'd be looking for a retest of the dailies here at 25.1 to 24.8. And of course, if we did see closures below there, that'd be a technical break and a close below the lower second. So I would be looking for expansion down to this weekly at 24.3 to 24.5. Of course, that would open up the next weekly at 23.7 to 24K. And the line in the sand for the bulls is that monthly at 23.3. So this is well-worn territory for us at this point. But for anyone new, if we did break down below that monthly at 23.3, I would be looking in the very low $20,000 region with some stops along the way. And if Bitcoin can recover this basis here at around 26,300 to 26,350, and especially this wick low over here at around 26.4, then I would be looking for a retest of this upper first around the next weekly here at 26,750. Above there, I would be targeting this monthly by the upper second around 27.2 to that daily above it at 27.5, where we saw our most recent wick high. And above there, I would be looking at this as continuation to go test this close open at 27.7 to 27.8 and that weekly above at 28K. And of course, that would make available the dailies above it at 28.4 to 6. And the next area of interest above there would be this low at 29K. And then, of course, 29.4 to 5, which was the kind of topping area of the range above before going into the sideways distributive consolidation. And if Bitcoin could get above there, then we keep an eye on that weekly at 30,300 or so. Above there, I think Bitcoin goes on quite a nice run to the upside. I wanted to get this out of the way because I want you to pay attention to where the pivots are. We're going to go low term time frame real quick and kind of analyze this move down from the weekend. And we had seen the move down prior to the weekend. Coming in last Wednesday, we saw a big high volume spike down. And this is our volume-based continuation and swing fail pattern tracking that we've been doing for quite a while now. And this chart has not changed at all since the original move down. And this high volume candle, once this was broken at around 26,800 or so, we did see this close come in shortly after, found as resistance, stepped it down to the next area at 26,650. Fell through that area all the way down, fell through the 26,465, put in a nice high volume candle low that sent price sideways. So I did mark that. And the overhead resistance there, I think that would have capped everything outside of this range, would have been this low prior to around 26.8. Now, we did see this area break down shortly after CME open on Sunday. And we did see this then come down and try to hold support at 26,232. That was that big area that I said, keep an eye on that below there. We're looking at 26K, possibly in and around that 25.7 to 8. We did see a run down to that 26K just below this 26,129. Nice bit of volume coming in here. It did try to hold itself up on that 26,400 area. Once it broke down, tried to close above that 26,232, lost it in the next few candles before settling in on the current low side structure around $26,000. Nice volume coming in on that low. We could see that we swung that a little while ago and then got a nice move back up to this now overhead resistance from this breakdown. So that higher volume breakdown is now acting as resistance. And this is, again, a really dead simple way to kind of deconstruct the order book even, and the areas of supply and demand and continuation. So we see a breakdown below a higher volume candle, we get continuation. Once we see a higher volume candle hold and we don't see closes below, we're likely to see a swing fail pattern. We saw a swing failed over here on the 15-minute, pops right back up. It is trying to hold that 26,232, and it's given this 26.4 area a couple tests now. So we'll see if it can push through. Let's go ahead and get away from this chart for just a moment, and we can go ahead and take a look, keeping in mind, of course, those pivots or the horizontal support and resistance areas that I had just spoken about on the Bitcoin in 60 seconds chart. And we can go back to the daily and just reference the bands by themselves. So having an upward slope of the basis here does favor a more bouncy look, especially with the upward facing standard deviations of the lower first, second, and third standard deviations here. Then I am favoring a bounce, even if the lower first does get hit there at slightly under 25.9. Now, this could end up being a lower deviation of the basis band. Of course, it does need to get back up above that upper first for me to be interested in looking at it running this local high again, on a close around 27.2 to that wick high at 27.5. So basically right there on the monthly, and then a wick into that daily overhead resistance that we were talking about. And that, that upper second standard deviation agrees with that, especially on the close open there being right at the monthly. If we did see closures above there, I would be looking for expansion. Currently, we are experiencing contraction of the Bollinger Bands, or a cool down in volatility, if you like. Above there, that's where we're getting that target of 27.7, 27.8 to around 28 to 28, 4 to 6 on the wick highs up here. So that would be expansion and closes above the upper second standard deviation. If we do see that lower first dropped, I'm looking for that lower second to get tagged again. I suspect that even if it got tagged and or we saw price shoot through, it would get an initial bounce, but then we come back to it later, see where it finds resistance, and see if a breakdown is more likely. Now we can go in and take a look at momentum on the daily here. Now this is the advanced stoke from KVDB over there at app.crowntrading.net. This is a paid indicator. I'm not an affiliate of theirs or anything, but if you ever want to pick it up, they have great stuff over there. But there is a free stoke with pivots here, and it's called the BA reverse stoke panel. And this pivot is, it's sitting right there underneath the monthly at 27,163 right now. If Bitcoin can hold sideways, though, around that weekly at 26K to that lower first area in the upper $25,000 region, this is likely to fall pretty quickly, and I'll show you why. If we go down to the 12-hour, you can see that the 12 hours right here within range. And in fact, it's looking like at this particular moment, Bitcoin's trading just like $50 underneath that pivot. So that pivot is at 26,275. If we go down to the 8-hour, we can see that it's actually above the pivot right now at 26,154. So if it can close above there in the next 8-hour candle in about 5 hours and 20 minutes, we would see this have a momentum shift while, coming off the lower second standard deviation. And just a reminder for those of you that might be new here, second standard deviations are either going to be reversal or continuation areas. They'll typically act as reversal areas when at support, horizontal support and resistance, or, reversal area when it's at horizontal support and resistance, in this case to the upside resistance at the upper second. And if we see the resistance broken, then it's expansion or continuation to the upside, or supports broken to the downside, then it would be expansion or continuation to the next area of interest of your horizontals. And that's why we have that this chart over here, the Bitcoin 60 seconds chart, that has all of the different horizontal support and resistances as they are mapped out and line up generally with those reversal and continuation areas. So the 8-hour looks like it could possibly reverse off of that area. There's still a lot of time to go, though. 6-hour is headed up on any closes above 26,276. Bitcoin is currently trading under there right now, but it's got 5 hours and 18 minutes to try and recover that number. The 4-hour is just now starting to get another initial cross to the upside. It did have a cross to the upside here, and it failed. So it actually, it was going sideways, failed, got nice compression here, and then expansion to the downside after it broke down from this high volume wick low. And we saw a little bit of expansion. Now it's mean reverting to test that area right by the basis here. But this would set in a low. If it can close here at 26,162, it would also get a full-on momentum shift signal on Stoke. And I suspect the hourly might be getting up there a little bit. Yeah. So the hourly is pushing the upper second standard deviation, and its pivot is at 26,153. So in this case, we would need to see, if it's going to be bullish, we need to see a bit of a momentum reset. Have it come down to somewhere around the lower first and hold it. I wouldn't want to see the lower second unless it gets picked up right away because of where the compression's coming in is past the closes. That means that the wick lows and lower would get ran, in my opinion. That's generally what we do see. So it can mean revert all the way back to the lower first, around $26,090. You'd want to see it bounce there. And in fact, it's more bullish above that basis at around 26,178. So if it can push up and start closing above that upper second standard deviation and regain this range above at around 26.4 to 26.6 area, then that would start turning some of those other higher term timeframes, medium term timeframes above the hourly, below the daily. So let's go ahead and take a look at some of the actual higher term timeframes, though. Now this was more than likely going to be a rejection, the way that the bands are situated on the 2-day here, around the upper first. This typically is what bears would want to see, to be quite honest. You get expansion to the downside, non-mean reversion, when it passes the basis, the primary resistance found at the upper first, but it is going into a contraction. So the bulls have a chance here. If the bulls can start to, not only hold this basis here on a close for the next 2-day closure, which is going to be today, by the way, and close back above the upper first standard deviation and then subsequently the upper second, which would be closes above the current monthly area where the daily and 2-day just topped out at around 27.2. We see closures above there. We would see upside expansion initially targeting, that 27. Well, this is actually around 27.3 on the 2-day, but we could start targeting that wick over here at around 28,200 or so, and this close open over here, which is coming in at $28,000, basically right at that weekly at $28,070. So that's what I would be looking for. Of course, closures below the lower second. It's got to hold the wick lows at around 24,821 or 24. Let's do that again. 24,900. So it's got to hold that area. If it loses it, it's in danger of losing this wick low, and then we're looking for another leg down. And that's where the 24.3 to 5 area and 23.7 to 24K area comes into play, and possibly that monthly thereafter. So this is going to close today. Keep an eye on the momentum pivot. If it does close below 26,221, you will see an initial cross down on Stoke. But because we are seeing compression of the Bollinger Bands, I would want to see the next 2-day closure. And if it closes below that pivot and starts heading back towards the lows, that's where I would be favoring expansion to the downside as a high likelihood, not a given, but a high likelihood. An initial cross down, I'm not too concerned with. So keep that in mind as well. But it's kind of trading in and around that momentum pivot currently. So if it can maintain it, we look to the next 2-day and see if it can start breaking out to the upside. If not, we'll come back to it, of course, on Wednesday and see what it looks like. The 3-day we can see is still in a range. Look, rejection at that basis band, of course, and that has moved down. And that is now at $27,000. So that overhead resistance of the basis band on the 3-day. The lower first is, of course, coming in to a very important area as well at around that 25,650 or so. And that's currently right around the lows and the close of the 3-day candles here on the low. And if it is going to be bullish and it does test down there, that's, that daily 25.5 area. That's where, you would want to see a bounce on the 3-day chart. Wicks below are fine as long as it closes back above. If it starts to close below, then we're favoring, the actual lows to get ran down to that lower second, which of course is coming in at $24,000 now. To the upside, if the basis is broken at 27,000, the upper first is coming in right at this wick low, which is at 28.4. And that's where we're getting a lot of that daily support resistance area overhead at the weekly at 28K and the dailies above at 28.4 to 6. So, and then above there, it would be very important for Bitcoin to break out above this upper second at around $30,000 and take out that wick high. I do suspect that even if Bitcoin went up there, it would get an initial rejection from that area, and then we're looking for higher lows. But that is a bridge we will cross when we get to it, if we get to it. 25.5 is the 3-day momentum pivot. So just below that lower first. So on the 3-day, you don't want to see the lower first lost. 4-day is going to be 25,343. Very nice. So Bitcoin does still have room to pull back. We see a little bit of a back test of the lower first here, and that is coming in at 26,100. And the closing lows are actually at 25,800. So Bitcoin could test around there and still be fine. Don't want to see closes below there. Then the wicks are available down to that lower second again, which is coming in at around $24,000. So back above the basis, which is right around this wick height, it's at 27,900. So basically 28K back above there. Then we're looking at the 4-day chart over here at 28.4 to 6, right? As that would be above the close open over here. And that the next big area would be the wicks. So everything's lining up with our daily support and resistance as it should. and as you're typically going to find anyway when you're doing this type of charting. The upper first coming right in at that close at around 29,700 to the wicks above at around 30,000 to 30,300. There is a weekly up there as well, and that area would need to be recovered, and then it's probably a pretty nice run back to the highs. Otherwise, Bitcoin starts to fall down. It's looking to that lower second at around 24.3, 24.5, 23.7, 24K area, around that lower second. And the momentum pivot being at 25,350 or so. If we start to see closures below there, then I would be favoring a move down, possibly even expansion to the downside. Now, I will say that I'm not necessarily looking for that. The BBWP is kind of telling me, like, hold your horses. Same with the 3-day right now, and the 2 days winding up as well. It's also saying, any kind of move back down is a move back to the mean. And then we just kind of wait. Now, the 5-day did shift and get a close open. This was Friday, our last live stream. I had mentioned, keep an eye out for where the close comes in, as we were likely to see a momentum shift on the 5-day. And the number to maintain upside on Stochastic momentum is going to be 25.5. And that is, of course, the area that if Bitcoin breaks down below 26K and especially 25.7 to 8, then I would be looking there, of course. And, that would also be below the close opens down here of the lows on the 5-day chart. And of course, below there, we then make available that wick, that's that daily support area down there, to the lower second, which right now is at 24,480, so 24.5. Everything's lining up with that weekly down there with the lower second. The basis band is the target if Bitcoin can remain above the lower first here. So the next 5-day closes in 2 days and 6 hours. And that's currently at 26,364. Bitcoin trading literally right on it right now. In the next 5-day closure, if it can remain above here, and then of course take out this 27.5 wick, then we're targeting that wick high at around 28.2 to the basis there at 28,350 or so. Above there, we're looking to the upper first at around 30,000 to 30,300 at that wick high by that weekly up there. And it doesn't look too bad right now. This is a building signal, so I know a lot of people getting really bearish on this little pullback, and nothing's confirmed until we see the breakdown. Right now, 26,250 is going to be the momentum pivot for the weekly, and that's going to be a big one. So by the close of this weekly candle, which is going to be after the monthly and quarterly closure. So we'll talk about this more on Friday, because we have Saturday, we have the monthly, and we have the quarterly closing. So this weekly is going to come in right after the monthly and quarterly open. If it does get across to the upside this week, that would be a good indication. Keep an eye out for the first week of October for it to potentially confirm that cross. And right now it's trading right around that pivot. So this would, if it does cross back to the upside, would be considered a bit of a momentum reset. Yes, did it make lower lows on the weekly? Absolutely. But it didn't break structure on the wick low there at 24,750. So that would be a bit of a momentum reset, even if I can get my words out right. And then we look at that lower first. We did get a close above it. It got back tested last week. This is not the best candle look. This is inverted hammer look, but holding that lower second, getting a lower first rather, and getting a momentum shift would be a good thing for the bulls. And that would start to look like Bitcoin wants to work its way back towards that basis band and the 20, at around that daily close open at 27,800 to that weekly at 28K. And then, of course, if it can get above there and especially close above there, we're looking back to the upper first area. Probably pit stops around that $29,000 daily level. It's also the open of this order block right here. So it's a close open there at $29,000 to the area just above it at 29.3, and the breakdown at 29.5, of course, on the daily to that upper first around 29.6, so 29.4 to 6 if you'd like, if you're taking weeklies. Above there, it's run the highs again at around 31.5, 31.8 towards that daily, weekly, monthly overhead resistance, that big overhead resistance up here that, we, quite frankly, I had waited for the entire time that this was chopping around up here, got that nice dip, and then sell right off. And that's kind of what I had mentioned at the time. It took a little bit longer to hit that 31.8 area, but big close open, and a lot of industry guys know that if it gets above there, then it's very quickly looking to around $35,000, possibly 42,000. And then if it was to push even further because of FOMO, then you've got that $48,000 break of structure there, brings things basically back to the lower side of the previous highs in the $50,000, $55,000 region. So don't want that. So can't let that happen too early, right? Now, if Bitcoin, of course, can hold this lower first, I would be favoring a move to, at least retest the local high there at 27.5. And of course, if it loses it at $26,000, this lower first, then I'm favoring a move. Guess where? 25.7 to 8. That's the close opens down here to the wick lows, of course, which is inside that daily support zone. At the daily support zone being 25.1 to 24.8, and we had a 24.9 wick. Below there, of course, the 24.750 down to the lower second here at 24.300, which just happens to be this weekly right here. So this weekly close open would be a good area to find some support, although I do think some higher term timeframes would start to turn against Bitcoin, and that would not look very good for the bulls. Now, I do want to say that there's a lot of people, I think, getting overly bearish, looking for from where Bitcoin is trading, and they're evaluating this and going, well, because traditional markets are a mess, and money and lending is restricted, and financial systems are literally like just hanging on by a thread, and traditional markets are headed down and breaking structure and doing this and doing that. Well, traditional markets also went up by 120% on average from the lows. So like a decent sized pullback is in order. And will that affect Bitcoin? Absolutely. If Bitcoin loses some of these important areas that we were just talking about. But during transitionary market periods, price can move very far before it's violating any kind of major areas. And the major low is pretty far away. Only once this major low gets taken out on a close, and I do mean the wick low there at 15,460, 15,500 area. If that were to be taken out, then I'm looking for new lows. But that area can even get swung, and it really is not. This is still a transitional period from a bear market to a bull market. And you might be saying, but the recession hasn't started, and this and that. Guess what? Everyone's calling for a recession. And I'm going to tell you and this is anecdotal, but I will tell you in my personal experience that if everyone's calling for the recession and everything's going to break, they're going to look for every single down move. That's the one. And as we get into traditional markets here, I'm going to show you everyone was calling for brand new lows on every single spike down, and it's the worst, and everything's falling apart, and Dixie's rallying, and this and that. Look, they can float markets much longer than you can stay patient for your recession boom bust, right? And quite honestly, by the time they start telling you that there's a recession here, the lows are already in. So I would just be patient. We can see massive rallies still in Bitcoin and even in traditional markets. So don't think that just because liquidity's tight and everybody's feeling the pain, you're feeling the pain, I'm feeling the pain, gas is going up, Dixie's going up, and everything is frightening. When everything is frightening, we might get volatile moves, but typically when they're screaming at the top of their lungs that everything is that the world is falling apart, it's usually your buying opportunities. That is anecdotal. I'm not going to go through and show you every single example, but I will show you Bitcoin's example here on the weekly. Look, major low, it got retested, but the world was falling apart. Everything, literally, the world was falling apart, and it made a higher low. Okay, so just remember that this was also a much more parabolic rally And, you know, there's plenty of warning signs when there was lower highs in here and then this failed high right here that this was going to happen. It was at least, at minimum, going to run the other way from, you know, upper second to lower second at minimum. And that was around $6,000. It dipped far below there and tested the high side of the lows. I would not rule that out, but of course, that's where the monthly comes into play. And we're going to revisit that on Wednesday and Friday this week. My son is sick, so I'm actually going to go a little bit quicker today. But I did want to get in there. If you're a perma bear, you just need to be careful because everybody's perma bearing with you. And if they're all perma bearing with you, it's very likely that the market's going to run against you. And this actually has less to do with psychology and more to do with liquid markets, because when you have that many people that really believe in that, they're going to bet that way. And when they bet that way, they're susceptible to a squeeze. And the same for the upside. And right now, I think things are pretty neutral. I don't think that it's neither bearish nor bullish right now. This is a neutral market because it is a transitionary period within the market. And it's only going to turn really, really intensely bearish. Look, it's going to be bearish, generally speaking, for some of the higher term timeframes below 24,750 on a close, especially on a weekly. That's bearish, though, to the next big zones, to the downside. This doesn't turn intensely bearish until we see, a lower low close than that $15,500. All right. That's just keep everything in perspective. Just like this is not really intensely bullish until we see closes back above, this high up here at 48,240. And it's still got work to do, but that's much more bullish. And it's not really, a parabolic run or a bull run until we're above $69,000. So keep everything in perspective. Transitionary periods in markets often will make fools out of the most people because people end up betting big on direction instead of trading the wider ranges. They bet big on direction for the longer term timeframes when in reality things are just reaccumulating for a larger move to the upside or downside. When you can just play these bigger ranges and be methodical about it, you'll have a lot of success. And then when it goes on the mega bear dump, you can one button it until you see some bottoming price action, or if it goes on the mega bull run, you one button it until you see some topping action on the longer term time frames. So wanted to get that out of the way. And I think it's kind of ridiculous for people to jump in and start calling for 10 and 12K until we see something major break or even new all-time highs this year. I know that even I follow people that I think I genuinely enjoy their analysis that are calling for new all-time highs this year. And I don't believe that's going to happen, but I can't discount their analysis. Their analysis is valid until it's invalidated, just like mine is valid until invalidated. These then just become personal opinions based on our analysis. My personal opinion, by the way, for a new bull run this year, very, very unlikely because Bitcoin needs to recover that basis on a close and maintain it at $27,000 or so now. Recover that upper first, which is right around key resistance, right below that $35,000 close open up here, which, by the way, it still needs to get above this. This close open right here. It's right on it. It needs to recover that. Then it needs to recover, the 38,500 area. Needs to get above that upper second to get expansion to the upside and take out that 48,240. And unless that's going to happen in, the next few months coming into December, it's very unlikely that it's going to happen. And it's got to get expansion on the monthly that then can close above, and not just wick the highs. So I don't see that happening. That's just from a volatility perspective. And volatility has not really ever failed me in that regard. But we could very well see, if the upper first standard deviation is held, right? We saw rejections at the upper second. I do think that's more likely than not, to be quite honest. I think this is going to be a prolonged market. That's just me. I think that if Bitcoin were to trade to the upper second, we see a violent sell-off. Maybe not what we're seeing here. Maybe we see a wider pullback here. Maybe it holds and then tries up. Who knows, right? But my point is that once we see the closures above the upper second standard deviation, then it's go time. And it usually is going to happen right around the highs. And you can see that upper second standard deviation, once the upper first was regained, it starts expanding towards that high. We get the close. It's basically right at the high on a close. And then the next couple of candles take out the actual high. By the way, it stopped right at the high, and it stopped there in November and then hit December. Now, of course, this got started in October, and of course, we're entering October. We have we do have a chance, so I can't discount, some of those guys' analysis. I can't discount it because there's nothing invalidating it yet. We take out, the last low and a close at 24,750 on the monthly and weekly and so on and so forth. Then it's pretty much invalidated for this year. But then we're just looking to the lower first, around $19,000 to $20,000. So above that upper second, though, then it's likely to go test those highs around 60. On a close, it's at 61,343. And then, of course, the wick high here on Coinbase is $69,000 exactly. Nice. So markets do like their memes, huh? All right, let's go ahead and take a look at traditional markets here because they were lurching a bit. Let's go to the daily. We've got our trend line break. Oh, no. Remember we were talking about this trend line? I don't really care about the trend line. It's more about the horizontal support and resistance. We saw the close below and then a gap down that lost the wick. We saw close below this guy here. So it's continuation to the downside on expanding volatility. And where did it head to? Well, it's making its way towards this high over here at around 33,800 to these lows over here at around 33,600. That's the next big area. It could even hit this wick down here at 33,400. If it does lose that, though, it would be losing this high around 33,600. So that high is actually in a close coming in at 33,600 or 582 rather. And there is some support right around this area as well. So I'm not looking for this to be a doom shot. If it does take out this area, we just look to the next big areas on the way down. So if it takes out the highs, you check your lows. And where there is high and low confluence, those are going to be the really important areas. So I would say around 33,750 to 33,600, that is going to be the big area for the bulls to hold for Dow. And, it is headed down. It is getting to some critical levels, but we see expansion of Bollinger Bands here. So the only way to really to stifle that expansion would be closing back above the lower second standard deviation, which was tested today and then rejected. So that lower second standard deviation is at 33,922. That, of course, is going to come down probably somewhere around 33,900 or so instead of 992. I'm sorry. So it's 33,992. I think that's what I said. Maybe I didn't. It's probably going to be closer to 33,900 by the end of today. And I would start looking at this as possibly trying to put in a low. If we saw closures back above it, you could also just take today's wick high. Today's wick high is at 33,989.51. Closures above there, looking for potential stifling of that expansion and then trying to work its way back up. It's still bearish below the lower first here at 34,260, 270 area. I would say 250 to this horizontal here, this is just a big historical support resistance area, and that's coming in at 34,464. So yeah, it's not good losing this area, but there's another low right here, and there's highs over here. So, and it's kind of trying to find support on those areas. The bigger thing would be, the weekly is ugly, and that's 34,834. So the weekly's ugly in terms of momentum, but it's actually not ugly in terms of structure just yet, unless we see a closure below. This opened here at 33,700 to that wick low at around 33,600. That would also be losing the lower first, and it still has a chance to go down and test that lower second then. But we're looking at a pretty steep fall of about, well, 700 points or so down to 33,000. But again, everything's in context. Yes, it broke out and it failed. Eyes on for the actual lows of this move aren't going to happen until we see closures below 31,430. That's when we have eyes on these lows over here. That's when things get really dangerous, right? So, yes, I know about Dixie. Dixie's doing exactly what we talked about, remember? You're not the only ones that are saying it over there in YouTube. So we're going to get to it. Now the NASDAQ trying to hold on to this 14,700, not 15,700. It did not drop its low over here just yet. So it still has room if it's going to head down. Again, if it can recover above that lower second, which is basically right at 14,713 or so, I'd look at this as generally a good thing, and it's trading right around there. If it can regain it, that doesn't mean that it's not going to go run this next area over here. And that's going to be the big one, 14,557. That's where we start looking at, going from this high over here on a close to looking at the lows being available. And that's going to be around 14,300. So that's like a 400-point fall from where it's currently trading. So if it is going to do that, we're going to see it, likely close below the lower second. If it does regain it, lower second's probably going to sweep under and then come in towards these lows. And then if it's retested and found as support, then of course the lower second can act as a reversal area. So keep that in mind. And the momentum pivot for NASDAQ is getting down there. It's getting into a pretty critical area here as the momentum pivot's still at 14,925 or so. This is going to pretty quickly accelerate down towards price action, especially if it can start holding that lower second area. But BBWP is saying that the lower second's going to expand into those lows. So I would favor a reversal. If it does head down, I would favor a reversal around some of these areas. So at this low, which is the high side of this area over here, at the 550 or so to that 14,300, I would be looking for expansion down to those areas with an aggressive look like that. If we do see, even if we do see the lower second regained and it remains below, specifically, I want to be very specific, below this lower first and this overhead resistance at 14,900. So we're looking at 14,900 to around 15K. And there is a gap there. So if it rejects there, it's still expanding to the downside, just so you know. Because it would be below the lower first. Yes. Wow. Oh, you guys, that's right. You guys don't have a delay over there. Cool. All right. So SPY, SPY did lose its low. Oh my God. Sky's falling. Oh, look, but our trend line's there to catch everything and save the day. Wow. Day saved. Trend line's magical. There's also a high right here. So there's highs over here. There's some highs over here. Now, granted, this was from a move down. So the true high or reversal or pivot point was right here at around 430. And what have I been talking about? Needs to hold 430 to 433. And 432, 433. If it can regain that lower first, of course, it is at 431. Then that would slow down some of this expansion, but it's pretty far away from the moving average now. So I would still be looking for this to expand a bit further down. If it loses this wick low over here at around 425, then we're looking to 420, and then come back to it later. I don't really have much more to say. I feel very confident in that analysis. And pivot is going to be 432 right now. So it's basically this recover above this overhead resistance and lower second, then we would see a momentum shift. That doesn't mean that it's not going to reject that, like the lower first, do a gap fill and then continue its downside movement. But I would caution against getting overly bearish right now. Of course, the 433 area is going to be this low right here. So that's prior low on any kind of a reclaim. And of course, any kind of price action. If this closes like this, any kind of price action above this open over here from Friday, which is at 432.45, then I would be favoring a low being set. And then we're looking at least a daily low being in, and we can come back to it later. Then we can look at Dixie. Dixie's going to wreck every market out there. Oh my God, Dixie's at 106, just like we said. If it breaks out above, probably looking at the upper second standard deviation somewhere in the low $106 area. But oh my God, sky's falling. The sky is falling. It's broken out. Oh my God, everything's, it's oil's going up and everything, all the risk on assets are going to go down. And hey, it's probably going to put in a high pretty soon though. So while we're looking at the potential areas for continuation to the downside, if markets bounce pretty strongly in those areas, you're likely to see Dixie put in a high. Now, Dixie's on a tear. This is a very nice move to the upside, obviously. You can just look at it, just like we had the nice move to the downside. We've been tracking this area for quite a while, and I told you, it looks strong, like very strong. But momentum will catch up with it. So this, 106 breakout, what does it line up with? It lines up with some of the areas over here. I would actually be favoring a test of this low from the way down at 106.26. If we see closures above there, then I start looking to around the deeper 106 area, 106.50 to 106.78 around this lower high, because there is also a high over here. So 106.50 on the close open here, 106.75 to 107 on the wicks there. That would be the next big area that I'd be looking for on Dixie to the upside. Now, the momentum pivot is right on top of Dixie on the daily here, 105.91. So it is still chasing, but of course it's going to steadily stay right on top of price here. So whenever price puts in a high, momentum will shift. And it's not just about the daily though. So whenever we see, right now we got to see a close below this last open all the way back here at 105.38 that also loses the upper first. That's just the way it works right now. That's the only way this is putting in a high. Now, granted, if it does put in a high right here and then tomorrow's a down candle, it's still, again, got to close below 105.38. That's where your technical high comes in. And I do recall pointing out that it had the potential rather to avoid bearish divergence, and that has now that's now on the table. Yeah, so in trend bearish divergence is possibly going to be avoided here on Dixie, which just goes to show you the strength right now. This also means if it does actually close a little bit lower, and where is that close going to have to come in at? Well, we can take a look here and estimate. So it would have to be below a 71 in this case. So we can take our bullish control zone or critical zone here and pull it down below a 71. And we can get what close would be needed for there to be a bearish divergence in this case. So it would have to be 105.87. So if today closes below 105.87, then there would still be bearish divergence potential. Right now it's looking like it's going to avoid it though. Looks pretty strong mid-session here coming into market close in the next 40 minutes or so. Looks very strong. Now, that does mean that it's probably, over the long haul, probably headed to like 110 or something, but that's just anecdotal. That's not technical analysis. It is based on some of my analysis, but it's more of a feeling than not. 105.68 is a 2-day pivot. This has got a little ways to go here. So another today's closure. It'll close at the end of Tuesday's candle. 3 days still chasing 105.78. So, and it's, very close, but not quite turned. That 4 days still going to be strong and up above 104.80. So it's not even close right now. And the 4 day, keep in mind, is going to be closing with the next 2 day. So that'll be Tuesday's candle coming into Wednesday, so we could take a look at it on Wednesday's live stream. The 5-day did just open. It's at 105.12. Now that 105.12 area really isn't going to come into play until, we see if it were to stop and reverse here. If we were to see a close at 105.38, then we could pay attention to the 105.12 area, which is, basically the breakout from this recovery of this low over here. And once it recovered that low, then it's, then it's move up to basically the next low. Once it recovered that low and took out the high, then it's a nice little move up to the next low side. So, you can see how support and resistance really is just governing things right now in terms of its moves up and down. The weekly, of course, is going to be the same look as the 5-day, so 105.12. That's once we start seeing the weekly turn, it can still throw wicks up there, maybe even get a little residual expansion, stuff like that. But in this case, yeah, I would be generally looking for a little bit more of a longer term pullback. So when we see that, we're probably going to see markets bottoming at the same time with that inverse correlation. And if Bitcoin can hold sideways and or even bounce with Dixie, because we've seen that plenty of times. I know a lot of people are like, well, Dixie's going up, Bitcoin has to go down. No, that's not true. We've often seen them run together, and then we get the actual divergence between the two. Whether it be Dixie down, Bitcoin up, or Dixie up, Bitcoin down, they can still run together for a little bit and or hold sideways. And that is going to be Dixie for you. I don't have too much more to say. We'll take a look at Wednesday. I think that's when we're going to see whether or not we get continuation on Dixie or not. And we can see that gold is still consolidating, but it's consolidating right on the razor's edge. Now, I was a little bit more bullish on this, and I'm starting to maybe revise that. Maybe, not necessarily. Now, the way I would revise that, of course, is on closures below 1884, right? But if we do see this lower first lost, lower seconds in play again, and that's going to be, 1900 to around 1910 or so. And, it's currently trading at 1915. So I'll show you why this is a little concerning for the bulls here, because the daily momentum pivot is at 1926. Of course, Dixie showing a lot of strength. This is not that surprising. But the 2-day is what would start to turn there at 1915. On any closures below there, that's when things get interesting. Now, there is some time for gold to kind of pick itself up off the floor. Granted, it would only be an initial cross, but you can see how this would bleed over into the 3-day, which is already crossed down on closures below 1917. The 4-day is at 1930. So if we do see closures below there, that's going to get across down. And then the 5-day would start to come into play. And if those crossed down and started to, pick up momentum to the downside there at 1905, and of course that weekly is going to be 1905 as well. So that's a little bit more concerning for the gold bugs here on the long side. Now, what I will tell you is this was a pretty big downtrend, so I am not entirely surprised that we're seeing this chopping around, because what we're seeing here is gold try to transition, much like what Bitcoin is trying to do. It's trying to transition from a downtrend to an uptrend. Doesn't mean it's going to be successful, but that's what it is trying for at this particular moment. So we have to let it play out. It might violate some of those pivots, but as long as it doesn't violate closes that imply continuation based on our price chart and our Bollinger Bands here, then I'm not that concerned about it. So closes below the lower second there at 1904 in this case, which would also be, a close. I'd need to see a close below the 1901 wick. Then we're looking at expansion back down to this support at around 1893 and possibly a retest of this low down here. So we'd have this low retested and then this low. And then if it breaks down, we're looking to the next major area. But we'd only really be stepping it down slightly. So, 1875 to 1865 or so. You could take an 1860 on the wick to 1875 and then come back to it, because there is a low right there around 1850 to 1856. or I'm sorry, a high. This is a lower high is what I meant to say. There's also a big old order block candle over here. And then we have the lows down there and the 1800s, low 1800s. So until we see a breakdown like that, not really concerned about that downside. And because we had a lower high here, as soon as we start seeing closes back above the close open at 18 or 19 rather. Jeez, can't get my numbers right. Said too many of them apparently. 1933, and then subsequently take out that wick high here at 1947, then go test the next one. Then we could see a structure break and possibly another move up. Of course, this low over here really governing things around that 1950 to 1955 area. So not too concerned. I want to see how things develop coming into the end of the month. And, you know, we could even see some nice volatility to the downside to end the month. Who knows? But everything is kind of getting into some critical areas. You can see how Bitcoin really is playing out on that weekly. That's going to be the one to watch coming into October, as it will already be October. But this could potentially turn to the upside. That would be very interesting. Just note, closes below that 26,250 by the weekend. Of course, that would just imply continuation to at least the local lows, and then come back to it later. So I will take just a question or two here, and then let's go ahead and read some of the chats just momentarily. Let's go back to Bitcoin. Did I miss anything, guys? Please let me know. Did I miss anything over there? Covered Bitcoin long-term daily chart. Covered the volume-based continuation and swing fail areas. If you're wondering how I constructed that chart, you're going to have to go back and find some of the videos. I will have a dedicated video on performing that type of analysis soon. But currently I don't have one. You kind of just got to go back through and look for the 15-minute chart stuff. Let me go ahead and get the music up and going again. Yeah, let's do this. And this way, cover for some of the gaps in me talking while I read some of these chats here. Okay. I got a request for MicroStrategy from a guy who professionally trades MicroStrategy. Okay. Yeah, I got you, buddy. I got you. I know you want to see what I'm seeing. All right. I think I want to say I did this recently too. I want to say maybe somebody from YouTube had requested it. It might have been Cheryl, if I remember correctly. That's Microsoft. You want MicroStrategy. Let's not do the 30-second. That's a mess. Yeah, nice gap down. Yeah. All right. So what are you looking at? Well, I mean, it went right to the areas that I talked about. I haven't looked at this in a while. So, yeah, I mean, a gap down to the lower second. What's the daily looking like? Looking like it's going to turn. So if we do see the daily turn, I would still favor lower highs, to be quite honest right now, but if it puts in a low, we'll have a drive of bullish divergence right here. So between these two lows, higher lows on RSI and lower lows on price action, we've got our regular bullish divergence. So if it can put in a low, it's got to close above 328.14. Regain that lower first. That would be your reversal off the lower second standard deviation. I'd favor a move at least, if it can get above that lower first back to the basis, somewhere around 345, 346 area, possibly a retest of 350, 360 at the upper first. Okay, so yeah, you are seeing the same thing. Yeah. Oh, okay, because yeah, so the Stoke pivot would be 320. Yeah. And currently it is trading at 325. So if it can close today like this, then I would be favoring a bit of a short-term reversal on the daily. It's still got to climb its way out from the 2-day perspective, though. 338. It is below the lower first. You know, but we're seeing compression, so we're likely to see this. And by Wednesday, we can always check up on it on Wednesday, but we're likely to see if it can hold the lows on a daily and put in a drive of bullish divergence. I like to see multiple drives, right? Just like on Dixie, we only saw 2 drives of bearish. I would like to see 3. You know, I'd want to see more than 1 daily bullish divergence drive, but we are seeing the lower second quickly, you know, move up towards price here. Now, if we did see a breakdown below it, and that's coming in at 307, so what does that look like on the daily? That's somewhere around the lower third. I would favor a bounce there. Excuse me. Sorry about the cough. Yeah, I mean, it could come down. There's a lower high in here, but you can see how it played down to the lower second, bounce up on expansion, that kind of thing. So this is a nice uptrend, to be quite honest. It's trying to chop its way out. This looks like a reaccumulation to, you know, it almost looks like a Wyckoff pattern, but if it falls apart, it won't be. It'd be a variation of a Wyckoff distribution if it did fall apart. Yeah. Warning signs below 266. Is that what you had? Perfect, dude. Perfect. It's almost like you were taught by somebody that had been doing it for a little while, and I'm glad to hear that you picked up on that. That'd be a warning sign, but that's not the nail in the coffin. No, the nail in the coffin is still the actual lows. The sign that you're going to run those actual lows is, you know, a wick low close, you know, close below rather this wick low at 188. Back above 388. You know, we're looking at probably pushing a little bit of short-term resistance at 400, but then we're looking at this thing probably pushing 425, 450, 475 very quickly again. Yeah. Yep. That would probably coincide with like a 2-day turn, of course, above 338, of course. Yeah. Yep. Cool. You're welcome. Yeah. Hold on one second. Hold on one second. Okay, sorry. Let me go ahead and let me check on for you guys over there in the in the Parsec. Give me 1 second. Let me check in YouTube real quick. I haven't really read this. Hi Bobby. Hi No Name. Hi Jedi. Roka. Don. Hello Don. How are you? Not too many talking. I see a lot of people watching, but not talking. So. Quick look at BLZ. I can look at BLZ. Last I had taken a short on it and then recently closed that short just because I had other things that I was looking at. Yeah, so he's looking at BLZ. He had just started to trade it. Again, I'm assuming you switched from short to long. And if I had to bet, Bobby probably switched from short to long right around the same place that I closed out some of my shorts. Yeah, you know, let's go ahead and go some lower term time frames. You know, it didn't even hit that 16,886 area that we were looking at. Want to go look at the 15-minute here. Yep. So this had a nice drawdown. Went sideways for quite a while. Let's see what the 4-hour looks like. Yeah. When the expansion, when it held that lower first, that was your sign that this was probably going to start expanding to the upside. Just so you know, for those of you that are unfamiliar, see the compression, it's going sideways, holding that lower first after getting above the tapping on the lower second. standard deviations catch up to it. It oscillates around, tries for the upper second a few times, holds the lower first on a bit of a Morningstar reversal candle there, and that was the warning sign that this was going to head up. You know, it's getting expansion to the upside, Bobby. I'll be honest with you. I'm not totally enamored with it. 1824 is going to be the momentum pivot for the 4 hours. So it's more going to be on the hourly to see where things pull back to. I mean, 1876 is going to be the momentum pivot to turn things back up, and it's trading at 1858. So 1876 right now, it would be above the upper first standard deviation, which would of course set in an hourly low. This can pull back to the high side here at around the basis band, currently at around 1838, 1840. And it can even come all the way back down to the lower first, not currently the lower second. Lower second is below the last low here on a close, which would open up the wick lows as a target. So what you'd be looking for right from here, at worst, lower first, which is 18 cents basically. Now, I will say, if this continues to close and get a pullback and remain above the basis, you will see that lower second rise up to that low and above it. And only if you saw closures below the lower second would I be favoring further downside or expansion to the downside. If it starts to expand above that low, and especially above these highs, and we see closes on it, and then, you know, a reversal in Stoke, as well as lower term time frame structure than the hourly, then I'd be favoring another move up, at least to the local highs or higher. I mean, I would be looking for eventually on any breakout of the current high structure at around 19 cents or so for a move up to the deep 19s at 19.8 to 20 cents or so, I would say. 20 to 20 and a half even on the closes up here. I don't know if it's got the juice to do that. I will tell you, daily closing back above the upper first, strong, putting in a daily low. You know, I don't have to tell you this would be strong above on a daily close above 1860. So 18.6 cents above there, setting a daily low. I will warn you that momentum will be down below basically the highs that I just pointed out, 20.5 cents, 20.617 cents here for the daily Stoke. But if it did get up there and close up there, it could shift that back around bullishly. So that's kind of what I'd be looking for there. Above 20.5 cents, it's right on the highs again. Just quite frankly, I don't have a good gauge outside of that. And then of course, if it drops 16,886, if it drops that area, that's when we're looking for a markdown into, you know, 16 and a half, 16 cents. And then the big area is going to be any kind of low 16 cent region reclaim of the close open here. But then it's really the high volume wicks here are 15.8, 15 cents, so on and so forth. Above 16.886 or 6, basically above 17 cents, it's looking pretty good if it can hold it. But if a daily low is set, it's likely to shift that daily momentum pivot around. So keep a very close eye on it. And I do apologize to you guys. I would stay and take some more questions. I actually see that you guys have like non-FINRA related test questions. So some of these guys are looking into chartered market technician exams as well. Very good. Very good. I encourage it. And see, the cool thing is you don't need to have any kind of sponsor for those chartered market technician exams. Yeah. For some of the FINRA exams, you need to have a sponsor. You need to be, if you guys weren't there, you would not be able to take some of those exams. The SIE and other exams you can take prior to getting sponsored for any of the more advanced examinations. But stuff like your market makers exam and you're gonna need your sponsor At least I believe that's the way that the exams go, right? Jimmy will have to, Jimmy would have to tell you about, coordinate with the test, or tell you based on a conversation with the test coordinator, because I don't remember. I could go check, but we're on a live stream. So, but CMT, that's a good one. This is for someone who's not actually looking into prop shop stuff, or not currently working in a prop shop, but would like to. Yeah. Chartered market technicians. Look, you're going to have to buy a book. You're going to have to do your own research. You're going to have to go and find, there's courses and videos, or you can go to their live streams. Look, they don't have the best materials. Their stuff is kind of shotgun all over the place, but they do have videos you can watch on their website. Let me pull it up. Yeah. It's a good stepping stone to get into the industry and get your FINRA exams as well. Like if you have a level 1 CMT, sounds like country music television. Yeah. So you can go to, I'll just bring it up for you, for the other gentleman that was asking. So you can go to, it's CMT Association. So it's cmtassociation.org. And they tell you about the session, where you can watch it. They have a YouTube channel, so you can go through it. If you've been doing any kind of stuff with me, a lot of this stuff is going to make sense. It's just a refinement and learning how to do your actual fundamental analysis as well. You do need to have fundamental analysis. You need to understand how to do statistics and actually put together reports based on what you're finding for a lot of this stuff, because in a lot of cases, if you're a chartered market technician and you're not an active trader, you don't have a market maker's license, you're probably not going to be hitting the trading floor. You're probably going to be in the risk mitigation department or analysis, that kind of stuff. Just being a regular analyst, not a trader. But if you want to move from being an analyst into actually trading, then you need those FINRA certifications. Excuse me, sorry. Did I ever get this? No. They were not what they are now. I mean, they've been around for a long time, but as there was demand internally for a lot of companies, this became a much more popular thing. But if you were going to go work a trading desk, you have to get your FINRA certifications. So no. Yeah. Okay, cool. All right. So I think that might just do it today. I'm sorry, Bobby. Was that satisfactory? He says, thanks. Yeah. 100 bingo, 100%. So I must have said all the things he was looking for. Sorry. As I said, my son is sick. I'm not feeling the best myself again now. There is something going around again that's a little bit more serious than just a cold. Lately. Thanks for your time. Hi, Cheryl. I think that's going to do it, though, for today. For those of you that are just arriving to the stream late, of course, the DVR function, just you slide it all the way back, get to the beginning of the stream. Of course, like the first 20 minutes is just, jamming beats, which you hear in the background now, hopefully, if I did things right. And then, then I jump right into it. And there is some pretty important stuff to be aware of today. As we head into Tuesday's higher term time frame closures with some of these assets and markets, you might want to pay attention to Dixie. It's hitting all the areas that we talked about, though. Not really surprised by any of this. There's a lot of people that are, but we've been tracking this very closely. But yeah, just go ahead and roll it back and or rewatch it later. If you can, give me a like on the stream, share it with people you think might find it helpful. That really does help. And the Bitcoin in 60 seconds videos, liking those actually really does help with reach. And then, of course, sharing. If you know people that might find those videos helpful, go ahead and share them. And I really do appreciate everybody's support. This is a small channel on YouTube. right? I'm basically a no one, and I really do appreciate you guys coming through and hanging out with me while I go through this. And I do have some bigger plans in store. And until I can get that Discord sorted out, there's some very specific problems I have to sort out. I'm actually not going to bring it up. But very soon, we're going to have some individual lessons based on some demand from you guys that aren't necessarily like a structured program, but more of like, hey, this is how you do this one specific thing that you see me doing all the time, so that it's individualized. You don't have to search through a lot of these episodes or live streams episodes. It's your Monday, your Macro Monday episode. So you won't have to search through everything. So, but yeah, I want to thank you guys for hanging out with me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please, of course, trade safe and stay safe. More importantly, it's a crazy world out there. It's an evil world we live in. Man, that guy's freaking hilarious. I'm gonna have to do a little bit more, but I'm gonna start cutting some of that stuff in because that's more my personality. All right, you guys, take care of yourselves. Thank you very much. Enjoy the rest of this playlist here for the next 15 minutes and this 30-second chart. With all of that being said, I bid you adieu. Landy out.
It's an evil world we live in. It's an evil world we live in. It's an evil world we live in.